Hey everybody, it's James here with Crypto Common Sense, and I wanted to sit down this afternoon and shoot a quick video. This video is not going to be about Bitcoin. This is going to be a trade lesson, and more specifically, a trade tutorial on how to manage risk so that you don't actually have to be a very good trader to be a very profitable trader. Before I jump into the content, please do me a huge favor, hit the thumbs up button, subscribe to the channel, and make sure to click the bell icon to get notifications when I release new updates. So just a few minutes ago, I actually opened up a couple of new trades, about 5 or 6 trades actually, and 3 of those trades I had posted up in my private Discord. And the trades are not posted so people can copy them. That's not what it is. It's really about teaching people and educating people about why I'm taking the trades and the thought process behind those trades. But what I wanted to do is I wanted to share some of that thought process with my free channels as well. And I've just simply redacted the actual assets that the trades were on, so that way people aren't trying to copy them and do all that kind of stuff. Of course, I shared that in Discord, but publicly I'm going to keep this stuff private. So these 3 puts that I'm talking about here, they were on an asset on the US stock market. And essentially what I did was I bought contracts for March of 2023. These contracts are what's called a put. A put is a bearish bet on an asset. And more specifically, what I bought was called a vertical spread or a debit spread. And what that means is I'm buying a put for one price and then I'm selling a put for a lower price. And so I make money on the difference in those puts if price falls below that level. Now that's kind of a mouthful, so let me show you what I mean on a chart. Now, first things first, this is not the asset that I opened a trade on. I'm just using this as an example. But let's say that before price fell on DocuSign, let's say that back here, I felt like price was going to go down. And let's say that I thought it was maybe going to go down to at least 180. So I thought, hey, it's going to go down to 180 and it may stop there. So I would draw a line on the chart that looks like this. And what I would do is I would buy a put, so let's say for 190. Okay, so $190 put, and I would buy that put. And let's say that I bought that put for January of 2023. So we'll say it's a January 2023 190 put. Let's just say that hypothetically that I paid, $500 for that put, okay? But then let's say that I wanted to limit that risk some, because $500 is quite a bit of money per contract. And maybe I decide, you know what, I don't think it's going to go that much lower than that. So I'm going to sell a put for 180. So I would go in here and sell a put for January 2023 for $180. So I would sell this put. And let's say that somebody paid me $350 for this put. Well, what that means is my actual risk will be the difference between $500 that I paid for this put and the $350 that I sold this put for. So if this does not go below 190, which would be right around this level right about here, if it doesn't go below that level before January 2023, that put expires, no harm, no foul. I just lose the $150 difference. But if it goes to that level or below that level, what happens is I get to execute my put and they get to execute or exercise their put. And that means that I make the difference. I make $10 difference. 190 minus 180, that's $10 per stock or per share. A contract is 100 shares. That means I make $1,000 because 10 times 100 is 1,000 minus the 150 risk. It means I make $850 profit, but I only risked 150. So once you understand that, this is going to make a lot more sense. So what I did was I opened 2 puts originally. These puts were quarterly puts and not 2 contracts, 2 different types of puts. There were 2 puts. One was a quarterly put for March of 2023, and I had $25 risk per contract. So if it fell under X price, I was going to make $75 profit per contract, which was 3-to-1 reward to risk. That means the most I can lose is $25 per contract. The most I can make is $75 per contract. I also opened a second put, which was a weekly option for March 17th of 2023. And that one was a bigger put, and so it had a bigger spread. So my risk was $107 per contract. And the maximum reward was going to be $393 if price fell under my target, which gave me a 3.67-to-1 risk to reward or reward to risk. That means that on these puts here, I can be wrong 74% of the time and still be a profitable trader. And then I had another put fill, and this one was a little bit more aggressive put. So my risk is only $60 risk because it requires price to fall a bit further. But if I'm right, I'm going to make $440 per contract. So I'm risking 60 per contract, going to make $440 per contract. That is a real reward to risk of 7.33, meaning that even if I'm only right 13% of the time on this trade, I'm still going to be a profitable trader. I can lose 87% of my trades with this type of reward to risk and still make a profit. So I wanted to sit down and do this video because trading is not about being able to predict the future. It is simply about finding a statistical edge in the market and then setting yourself up so that when you're right, you make a lot. When you're wrong, you lose a little. And if you do that, you only have to win about 20 to 25% of your trades realistically to be a very, very successful trader. If you'd like to learn more about trading or more about options or more about my trade indicators, be sure and check the description. There's a link down there where you can join all three for one low price. Also, please remember that I am just some guy sitting in a spare bedroom, and that means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor, which I am not, before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. This is James with Crypto Common Sense reminding you to please trade safe. I'll see you in the next video.